Hey, what's up, YouTube? It's Timmy here again from SwingTradeFX. It's been a minute, and today I feel the need to share you guys, one of my many trades, and just for educational purpose. And in today's video, I want you to pay attention because everything that you've learned from me, a bit of them, I'm going to be showing you how I'm able to put them together in real life. And as you can see on your screen, I'm going to be showing you how I went from this setup to this setup right here. And most of the setup, I send it to my free channel. So I want you to sit back and relax and just pay attention and get your journal down because you're going to learn a lot in this short video. So let's go. Okay, so welcome back. This setup, I shared it right on my free Telegram channel, as you can see. So if you're not on my Telegram channel, you can join via the link in the description or the comments I pinned in the comment box. I shared this setup right here on my free channel. We have people watch their life and have a lot of people pick the right, and it played out exactly how we wanted it to play out after a day or two. And this is how it currently went. And I have a lot of people send me different text message. They make money from it independently, even as my students, and even some just taking a profit. And if you are not on my Telegram channel, you should click the link about. And if you want to contact me directly, I would never text you first. Please don't get scammed. All you have to do is click contact at me, and my team are going to reach out to you. Click on contact with me, send us a text, and we're going to reach out to you. We have a growing channel of independent traders, right? We are not here to be a signal provider. We're here to train you to master so that you're able to repeat this behind us. So go to SwingTradeFX1 directly on Telegram, or click on the link in the description. That's the safest way to do it, right? I brought down videos on videos, photos on photos, right, just to educate people to get on us on the right side of the market and not just leave them by themselves, just like you're doing right now. So please and please don't get scammed. A lot of people are under the guise of SwingTradeFX, scamming people off. First of all, just I would never text you first. And second of all, if you want to reach out to me directly, it's through my Telegram from the link in the description. And all you have to do is to click on contact at me. And when you send us a text, we're definitely going to reach out back to you. So let's get back on the trade and see what we did right on our chart. So this is the real chart right here. The market has take profit right here. So I'm going to be doing a recap of what we did. It was a very simple one. I saw a lot of people have a lot of things to say about GJ this week, saying, oh, that there are no opportunities on the market. And I say it's a big fat lie, right? I say a lot of traders talk about it, and it's a big fat lie. If you understand the market flow, if you understand how the market moves, you're going to see that this was relatively an easy trade, regardless of how slow it was. The goal is not to determine how fast or slow the market will be. The goal is to be on the right side of the market all the time, so that eventually when it finally moves, you are always on the right side of the market. So for us to be able to get this right, I'm just going to backtrack a bit to the daily time frame. And what did we do on the daily time frame? It was pretty simple. On the daily time frame, we had a situation. So I'm just going to take this off to let it just go to the 4 hours time so that we can have clarity of what we want to do. Okay. It's a very simple trade, and you're going to learn why we were able to get this trade very easily, right? So let me just put this back. And by the way, I wanted to say that when you're trading in the market, learn to listen to your own voice, right? Different people have different opinion about something that they are not really expert at, right? And that is why at SwingTradeFX, I made it mandatory for all my students to be able to do things on their own even after teaching, right? The goal is to be able to create independent minds in the market and making sure that everyone has what it takes to open their computer and trade at will and make money at will. The goal is for you to achieve mastery at your execution, your exit, and effective risk management. So let's get into it. So on a daily time frame, one thing that you can realize is that the market has been going on a higher low, higher low, higher low, higher low, higher low journey, right? So it tells you that at this point in time, the market is on an uptrend, right? With this level being the most recent and significant higher low. However, we have the market continuing to make a push after it got to this point. So we have an area of resistance right here where the market was reaching at, right? And that was what prompted us to go into the 4 hours time frame to see what the market was really, really doing. So on the 4 hours time frame, all we're interested in was what happened between this point right here, and this resistance region right here that we picked, right? We wanted to see what really transpired in there, right? And that was the reason why our focus was right in this level. So let us interpret what really happened in the market. On the 4 hours time frame, we saw that the markets also follow similar sequence like the daily time frame, right? The markets kept going on a higher low, kept going on a higher low, and this was the most significant higher low at some point, right? When we got into well, before we got into the market, right? And the fact that the market found its higher low right here could easily be interpreted as this, right? Because it's always good to identify the flow of the market and understand where the pressures are coming from, right? The pressure is coming from this daily higher low level right here, mounted some pressure right here. We see some buyers action right here, that we have further buyers momentum right here, although the market went up, and now we are having some more buyers momentum right here. The first goal was to determine what led to the market finding a buy momentum right here. It's pretty much simple. When you bring out the Fibonacci tool from this point right here to this point right here, it tells me what I need to know. This is the 61.8 Fibonacci level where the market was rejected. Aside from that, you can also make a case for the market as regards to the fact that the market is rejecting this previous area of resistance right here, turning it into a support. So that was all we needed to know. And the moment we figured that out, we realized that not this the momentum that the market was bringing started from this point on the daily time frame. More momentum came in, more buyers confidence came in, and we have a impulsive buyers confidence came in right here, making this point our area of interest for the week, right? But the market had moved, right? And after the market made a push at like that to that level, what do we have? We have a situation whereby the market made a move also to this point. Now, this became our point of interest where we moved to the 1 hour time frame. So what really happened right here? Before we move to the 1 hour time frame, I would like to make a sense for what really happened right here. It's very simple. When the market got to this point right here, the market made a very, very sharp move to the upside, right? That's the first thing I want us to understand. So now, at this point right here, we was a little bit bearish on this trade, and we closed out at break even because we thought the market was going to come down and was going to keep coming back down. But something really interesting happened right here. And what really interesting happened right here is the fact that the market found a rejection. And I remember that I saw this rejection, right, in the morning time, the PST time zone, right? And the market was here. I waited for the market to pull back, right, for me to get out, right, on little profit. And what was the reason why the market did that? It's very simple. Remember that after a push in the market, there's bound to be an exhaustion before the market starts to move in the direction of the market. So how do we figure out this level that the market pulled back into, right? Initially, we had a bias that when the market breaks, we're going to be coming down to this point. But what really changed? What do we experience right here? It's very simple. The market went to the market came down, and when the market came down, let me make this a bit more clear. The market made a push to the 61.8 Fibonacci The market made a push to the 61.8 Fibonacci region. And what do we have right here? We have a situation whereby the market was rejecting the 61.8. Hold up. We had a situation where the market was rejecting a new 61.8 region, right? So now, when you put this into proper context, right? Because everything you need to understand is the flow of the market. Buyers, orders got in right here. More buyers, orders, more buyers confident. Now we have a very good buyers confidence. Now, the fact that the market moved as much to that point, now we're now having a situation where more buyers confidence are entering right here. So this was the point where we got out of our trade, right? And we knew that, okay, the market was going to be going up, right? And how did we join those trades? So we went on the 1 hour to understand what the market is doing. So we know that this is most likely going to be the most recent bias area before we finally have the market make a push. So at least this resistance area. So that was our bias on this trade. So let's go to the 1 hour time frame. So on the 1 hour time frame, what did I get, right? We had this first area, this 61.8 on the 4 hours time frame, bias confidence, right? And now we are having a new 61.8, right? On the 1 hour time frame, you want to bring the 61.8 Fibonacci right here to this point, and you can see right here that we are having a situation right here when the market was rejected at the 61.8 Fibonacci point, right? So when the buyer's confidence came in right here, so what had happened? This was a situation of the markets making a further push to the upside, right? But are we just going to enter just like that? No, we're not just going to enter just like that, right? For me, I do not find my entry on the first phase of the push, right? I wait for the exhaustion to happen, right? So when the market made a push to this level, I was waiting for, a seller's confidence, right? And I remembered that I had my counter trend line at the point right here. So the buyer's confidence that came in right here went on to this point, right? So we have more buyers coming right at this point, and this buyers actually broke the trend line right at this point. So I know, number one, the counter trend line was broken, which is a very strong indication that the market might be moving in the direction of the market, in the direction of the bulls, right? But then would I just enter? I saw a lot of people just pick their entry right here. Remember, every of my student knows not to enter the market on the first phase of the push. Always wait for the more confirmatory buyers to get into the market. So what do? We waited for that to happen, and after the market made a push, right, the first phase of buyers came in right here, which I joined them, right? Then we push the market further up. Then we anticipated a retracement, right? Then the second phase of buyer came in even deeper right here. And what was the psychology behind it? The psychology behind it is the fact that when the market made a push right here, which is the 4 hours 61.8 level and previous area resistance to support, we had another phase of buyers come here. Now we are not looking to enter right here, right? We want these buyers to do what we call the break, right, and the pullback, right? So the moment the market made the first pullback, we had 2 points of buy entry, right? The first point of buy entry, I got in right here, and the second point of buy entry, I got in also right here, right? Making me enter 2 positions, right? So now that the market made a push, now we have a new phase of buy entry right here. Let me just make it very clear. We have a new zone of buy entry right at all of the zone right here where the market made a push, right? So we got into our trade. We have our stop loss right below right this point, and we had our target right above this point. Now, what factored our target, right? Remember, your exit is as important as your entry. Most people focus on entry and they forget their exit. But before we get that, I would also like to add the fact that why do we think the market was going to reject right here? It's very simple. After the market make a push right here, there's bound to be an exhaustion. So technically, you measured your exhaustion level with your Fibonacci level. So what do we have right here? We have a situation right here where the market made a 61.8 Fibonacci pull back to this level. So that was all we needed to know. So the moment the market made a push to that, to all of this zone, we know that the market was ready. That was the reason why we pulled out our triggers. So now, how do we get the exit, right? We have an area of resistance right here. Why did we set our exit below, and why didn't we set it above, even though the market hit that point? It's very, very simple. The thing is very simple. You want to put your exit at the safest point possible, right? So instead of targeting this, I see many people are even wanting to buy above. I do not think the market is going there, right? I believe the market, the most conservative point for you to exit the market is actually at the, at most at this point right here. Okay. And you can see the market actually reacting with that level. But we decided to get out of the trade right here. Why is that? It's very simple. We realized that this structure started from this level, lower low, lower high, low to the 4 hours time frame buyers area where the buyers got in. They got in massively right here. Now they came in right again on the 1 hour 61.8 Fibonacci level. Now I'm interpreting it technically, right? And the push forward to this level, then we found an entry up on this exhaustion, then further back to where this structure started from. So this was the reason why we got in. We got that right there. And what did the market do? The market did just right there, right? And I was able to do 1:2.5 on my 2 entries. So I have 1:2.5 on the first, 1:2.5, 5 now on the other one. So this was a trade of risking what I risked, and I made 5 times everything I risked. So this is a very beautiful way to see the market. When you start to achieve mastery in this game, it begins to make sense because it gets less technical for you and you see things from the more psychological area, right? It's going to require practice. I'm not going to sugarcoat it, right? But with the right set of knowledge, you can easily overcome this, right? So I do not want you to trade naively in the market, and that is why I'm introducing you to SwingTradeFX 101 mentorship, right? If you're watching this, I think you need to get signed up for the SwingTradeFX 101 mentorship, right? We take limited people so that we are able to focus and track the progress of our traders every now and then. And I need you guys to please stop blowing your money. I get hundreds of messages every single day about people blowing their money and walking in circles. You don't really have to, right? Take a month, 2 months down to take a course, get a knowledge from any trader that you trust. It doesn't have to be even me, right? If you find them really cool, accessible, and you find what you do really great, take a course from them. Learn what is working. Stop reinventing the wheel. Just work with what has worked for people and save yourself days of frustration. So I hope you guys have learned. I will simply just cut into the straight, right? You're going to get to a point where you understand this game. It becomes so seamless for you, right? Right now, the market at ETP, I'm seeing some very new opportunities in the market already that after now, I'm just going to analyze and, I'm going to just break down. And these are just, these opportunities, I see money, right? You see candlesticks, I see potential opportunities to make money. And this is how you have to see the market. So thank you guys so much. I'm back on YouTube again, and you're going to see more of my content right now. And I plan to actually post forecast every beginning of the week now. So let's see how that goes so that I can be able to guide you and you can be able to make a decision based on my lens. Okay. And I wish you guys the very best. Thank you guys so much and have a very wonderful rest of your week. God bless you.